Hi everybody, this is Gary Dean with Sentiment Timing, and this is a free technical video report for Wednesday, April 10th, 2019. Hope everything has been going well for you. We are actually entering some interesting times right here. I'll show you with our predictive analytics model that we've had a change, and I'll go over the reasons why that change has come through, but it just makes things a little bit, let's say, dangerous for the long side, and that doesn't mean that we can't head higher. It just means that things have gotten a little bit more dangerous. So the predictive analytics model, obviously, anybody who's been around for quite some time listening to these video reports, it's based off of time. That's when to expect a trend to reverse. Sentiment, and those you're always going to get a sentiment extreme at either tops or bottoms, and technicals, and those are off of price patterns, divergences, and all the other fun stuff. So right now we've had short term has been neutral for quite some time. Back in December, we had all three of our, well, two of the three actually, that we had a bullish short term and bullish intermediate term, and long term is bearish. And the reason for that is we're really not looking for a solid low until the 2022 time period. But we don't make trades off of those. Those are just long term views of things, and we really trade the intermediate and the short term basis. So short term has gone bearish, and right now we know that we've had a series of extreme bullish sentiment readings. Everybody that you read right now is getting ready for new all-time highs, and this is typically what happens at tops. But again, that's not the only reason why we our model will go bullish or bearish. It has to do with the time period as well as the technicals and patterns that are in play. So we have, for short term, we're into euphoria right now. Intermediate term, we went from down here, well, actually down here, this is when we got bullish on the market, and it is probably right in this area here, because we're going to be approaching that intermediate term top, and it's kind of crazy how fast it's come. We were talking about back in December when this top was supposed to hit, and so there's always been plenty of time for the bulls, and that's one of the reasons why the intermediate term has stayed bullish. But the thing is that we're now starting to approach that time period, and typically what's going to take place is we're going to get big swings, and that's probably one of the reasons why the model has switched to short-term bearish. So hopefully you guys have gotten a chance to take a look at the piece I put out today, and that was Woody's, It's All About Time. Definitely read that. It is worth it. But this is, you can see that we've had nothing but extreme bullish sentiment readings. Down here, everybody was bearish on the market. So let's take a look at the charts and show you what's going on here. So one of the reasons why we are short-term bearish on the market is we're in a time period that we are, could make a turn at any particular time, and it would fit the profile. Sentiment, as I showed, we've had extreme sentiment readings, but now we look at the technicals here, and this is the third phase of it, where we have the bearish divergences. We've never had really any type of real pullback from the lows that we made in December. And the pattern right here is this bearish wedge, and this is giving us a pattern depending on when it gets down here, because this pattern is moving lower, of anywhere between, let's say, the 27.26. We have a gap here at the 27.43, and then we also have these lows here at the 27.22. So these are possible targets. But the thing is that's interesting about this is that that's most likely not going to be the intermediate term drop that everybody, that and some extreme bearish people out there are expecting. It's probably going to find a low, and from there we're going to get another high. And this is kind of how I have it labeled. It doesn't really make a difference where this wave B is. We could put it here, we could put it here, but in any case, let's just leave it here. So the way that we're looking at this is that when this drop comes, and the bears have not put any any effort into trying to take this market lower. They failed at every important support zone, and they've gotten demolished. So what's going to happen if we get a move like this that could be anywhere from 150 to 170 points to the downside? That's only going to be a wave B, and then from there, most likely this is going to be the where we're going to be seeing technicals as well as sentiment getting some extreme bearish sentiment readings, and that's going to mark this low no matter where it is, whether it be just closing the gap here or coming all the way down. Whatever it is, we're going to get extreme bearish readings, and that's going to mark the low at one of these support levels. And then from there, we're going to get another push higher, and everybody that's a perma bear is going to get wiped out. Everybody that was expecting this market to go straight up to 3,000 are most likely going to get washed out, and from there it's going to leave a nice move where it should take us into that final time zone that members know when to expect the intermediate term top. And the interesting thing is when that hits, most likely we're going to have bearish, bearish, bearish. And the reason why that's important is the last time we did have that was when we were hitting this kill zone here. So the upcoming top, the intermediate term top, this is what Woody is calling the kill zone, and from that we're going to get another one of these moves. So that's why I say things are starting to get a little bit interesting, because we're approaching time periods where intermediate term tops are going to be coming into play, and right now short term tops could be in play. Now we may get another push higher. If it is the way that this wave structure would be is 1 2, this was just our wave 3, we came down and make a 4 and a 5. If that happens, doesn't make the long side any safer, because this should be the final wave structure, wave 5 up of 5, and from there, that's when we're anticipating some type of pullback that could take the S&P to the 23% retracement, 2766. It could even go down to 2686 and still be making this wave B. But don't get fooled, because we're probably going to come right back up here once we get the extreme sentiment readings on the bearish side, and from there it's going to be a good buying opportunity. So right now, short term, we're expecting a drop. Intermediate term, that drop will probably be a good buying opportunity. But don't fall in love with the bullish side if this does play out like this and we start heading up, because that is going to be heading right into the kill zone as well as our intermediate term top. And from there, we are going to have a bearish that predictive analytics model. And like I said, last time that happened, this is what played out. So if the bulls head higher, most likely we'll see the 2900, 2905. Bears still need to get it through this 2860. Until then, the bulls are going to hang around. And with that, if you guys are interested in any of the specials we're running, we have the yearly special. This is $100 a month. It's an annual fee of $1,200. Or you can do the $99 for the first 30 days. So with that, if you want to know when to expect a low with the next bearish sentiment readings once this top is made, I would take advantage of it, because we have that kill zone intermediate term top that is approaching. And excuse me, as I said, you don't want to be long when this happens. So have a great night, and I'll talk to you guys next week.